Welcome back to our weekly market wrap-up. Indian markets ended the week on a weaker note as global uncertainty and sustained foreign institutional outflows weighed heavily on sentiment. Weak Q1 earnings from IT majors and unresolved US-India trade discussions added to the cautious tone. So stay tuned, and by the end of this video, we'll unpack the key drivers behind these movements and what lies ahead. This week, the Sensex slipped by 0.3% to 81,463, while the Nifty 50 dipped 0.5% to settle at 24,837. Interestingly, the broader markets underperformed. The BSE Mid-Cap Index declined by 1.4%, and the Small Cap Index fell by 1.8%, reflecting reduced risk appetite across the board. These movements highlight investor unease around earnings disappointment, global trade uncertainties, and persistent FII selling, despite early strength from banking leaders like HDFC Bank and ICICI Bank. Let's take a look at this week's key economic updates. India's retail inflation dropped to 2.1% in June 2025, marking the lowest level since January 2019, largely due to a sharp decline in food prices. At the wholesale level, inflation also softened, turning negative at 0.1% compared to 0.4% in May, driven by easing prices in food, crude oil, and basic metals. India's trade deficit narrowed to $18.7 billion in June, down from $21.8 billion in May, a positive sign indicating improving trade dynamics despite ongoing global uncertainty. However, India's forex reserves declined by $3.5 billion, settling at $699.7 billion. The drop was mainly due to a fall in foreign currency assets, though gold reserves and IMF assets saw minor gains, offering partial support. Globally, all eyes are on the upcoming PMI data from the Eurozone, UK and US, which could offer fresh insights into industrial activity across major economies. In addition, the European Central Bank's rate decision on July 24th, along with the latest US jobless claims, are expected to influence global interest rate expectations in the coming weeks. Among this week's top gainers, Eternal gained 19.6% after reporting strong revenue growth in Q1, driven by solid traction in food delivery and Q-commerce segments despite weaker profitability. Electra Greentech rose 16.1% on the back of robust Q1 results and a rising EV order book reflecting increasing investor interest in electric mobility. Gujarat Mineral rallied 14.5% amid strong quarterly earnings and renewed buzz around rare earth minerals, hitting fresh 52-week highs. On the downside, the top losers. Indian Energy Exchange fell 29.5% after CERC approved market coupling, raising fears of reduced pricing control and lower trading margins. Valor Estate declined 21.5% on weak realty sentiment and profit booking after a sharp recent rally. Newgen Software slipped 17.0% after missing earnings estimates and posting a subdued Q1 performance. Activity in the unlisted space gained momentum this week. Tata Capital remained in focus ahead of its upcoming IPO, drawing consistent interest from investors. Physics Wallah received SEBI's nod for its Rs4 600 crore IPO, a significant move in the edtech space. NSDL set its IPO price band at Rs295, Rs305, nearly 30% below its grey market premium, sparking strong interest from HNIs and institutional buyers. Nayara Energy reaffirmed its Rs 70,000 crore India investment commitment, signalling confidence in India's long-term energy demand. Unlisted companies seeing strong traction this week included NSE Tata Capital, NSDL Physics Wallah, Nayara Energy, and HDFC Securities. That wraps up this week's market highlights. Here's what to watch in the week ahead. Next week, markets may open on a volatile note as global signals ongoing US trade negotiations and a heavy Q1 earnings calendar weigh on overall sentiment. Key corporate results to watch this week include Tata Power, Maruti ULL, and T-Sun Pharma and ITC, all of which are expected to drive sector-specific momentum. On the domestic data front, investor focus will be on India's industrial production out, July 28th, Fiscal deficit data due July 31st. Manufacturing PMI for July expected on August 1st globally. Attention will be on China's manufacturing PMIs. US Fed's interest rate decision scheduled for July 29th. US data points like job openings, GDP numbers, core PCE and non-farm payrolls which will influence global risk appetite. That's all for today. Stay connected with Ticona Capital for more insights and wealth-building opportunities from the themes of the decade. Explore more on ticonacapital.smallcase.com to know more. Don't forget to like, comment and share. See you next week.